What's going on, guys? Zach here from iTrendz coming to you live. Just got a new webcam. Hopefully the audio is much better now. Hopefully it's not too echoey. I know the background doesn't look so good. There are some noise cancellation things in front of me. Hopefully it doesn't bounce off the back too bad, but we're going to try this out. We're going to be talking about cup and handles today. We did this class a couple weeks ago, was waiting for this webcam to come in so I could fix the audio so you guys could hear me a lot better. We got that comment, and so we want to make sure that we fixed that ASAP. So today we are going to be talking about cup and handle pattern, the advantages, disadvantages of that, how to identify the pattern, how to trade them, how not to trade them, some examples. We're going to go over a few examples and some key takeaways. And also just want to apologize, talking to you, Miss Poke. We don't have a ring light yet. That's coming. So, but we need to get these videos done. So my face isn't as important. It's just as what's going on the screen. Hopefully you guys are going to get a lot of value out of this today. So cup and handles are continuation patterns. Now those patterns, let's get my laser up on here. Those patterns, they usually form after a recent high has occurred, where they then dip in price and they form this rounding price. Looks exactly like a cup. Before it pushes up back to resistance, it pulls back a little bit, and then it eventually breaks out of that consolidation phase and breaks above. And that would be a completion of the cup and handle pattern. Again, it is a continuation pattern. It's not a reversal pattern. It's a continuation pattern, and it contains a bull or a bear flag in the final stages of the pattern. The origin of the cup and handle pattern was founded by William J. O'Neill in 1988. Mr. O'Neill also founded Investors Business Daily. You guys might be avid readers of that. He also was the founder of that. He was the one who coined the cup and handle. So cup and handle patterns can be identified in all time frames, but with all patterns, the larger time frame patterns, they hold higher probabilities than on smaller time frames. Cup and handle patterns on large weekly, right? If you want to think about weekly or daily pattern time frames, can be difficult to nail entries as they do take a little bit to form. So it's kind of a double-edged sword. You want to make sure that if you're looking at a overall larger cup and handle, you want to make sure you have time on the trade, or at least you have your exact risk to reward ratios mapped out, so that way you are not getting too confused about the intraday price action. As you can see here on the left, this was what we talked about, cup and then a handle. So right here, the price makes a high, rounds out, goes back to retest that resistance, that previous high, and consolidates, form this flag-like pattern here, right? A little flag-like pattern, and then it breaks above that consolidation, and then eventually breaks out to the upside. And then the inverse cup and handle is just that on the inverse side. We're actually just experiencing some of this right now in NASDAQ and SPY right now in February of 2022, depending on when you guys are watching this. There are 4 stages in the cup and handle pattern. Stage 1 is the setup. That's where it makes that high down here. Stage 2 is the decline, where it pulls back. That's this rounding right here from the highs. Now it's really, really important to note that it does not dip 50% below the most recent run up. So as you can see right here, let's just coin this as a 100% run up from price, from the low down here to the top resistance that it had formed, 100%. This cup should not dip below 50% of that overall extension, which was 100%. So therefore it should not be below 50% of the total extension here. So stage 2 is that decline. Then stage 3 is the recovery phase, where it starts to fully round out and gets back up to that previous high, ultimately fails, comes back down, and then you get into stage 4, where it consolidates either to the side like this, a little bit down, or you can consolidate to the side. And then that would be when my computer's just bugged out. Sorry. That would be when the price revisits that resistance level, as you can see on this red line right here, that resistance level, and breaks above that, that's your breakout. And then you get to extend beyond that. So a true break of the pattern comes after the handle, retesting the highs for the 3rd time. You take it on the break of the neckline. Most traders would call it the neckline. To measure that extension beyond the neckline, you have to take what is from the high, the resistance that it first formed, the highest point, down to the middle of the cup. So that would say measure 20 points here. So your extension, it should be 20 points above that breakout line up to the top. So hopefully that makes a lot of sense. I just want to make sure that this is still recording. Okay, it is. Okay, perfect. All right, so what are cup and handle patterns? Well, cup and handle patterns, technically speaking, you don't want to see that cup dip more than the 50% like we just talked about, and you don't want the handle to be too strict in its downward price action. And it's kind of hard for me to describe this, but you don't want the handle to look like this after your break above. That is um, much less highly probable than if your handle were to look sideways or just slightly consolidated to the downside. Another tip is that you don't want the handle to dip more than 50% of the total cup. So if we go back here, we go back one, you don't want this handle to dip more than 50% of this cup. So if this was 20 points, you wouldn't want this to be down more than 10 points. That signals a not so good handle. And therefore the probability of your risk to reward as the pattern is playing out becomes less and less and less. A tighter and more consolidated handle is more optimal, right? That's most optimal as much as it paints that clearer picture. So this, going back to this photo right here, this is really tight. This is really awesome. Very, very tight. Obviously it's a line chart and somebody probably drew this on their own, but this is a very tight handle. The handle isn't strung out very super wide, so it doesn't get convoluted in there. It's very clear that the buyers are trying to get that price above that breakout line, and the sellers are trying, but they're not succeeding very well. Excuse me. If the handle is in too sharp, right, that too sharp of that decline, the pattern becomes a little bit more obsolete and is a much less higher probability of actually playing out. So we want to just make note of that. Some advantages and disadvantages of the cup and handle. Well, one advantage is that it's easily identifiable for seasoned traders. I'm sure if you are a seasoned trader, you've seen this, especially now that you see it on the screen here, you probably are like, oh, wow, I've seen that pattern a lot. Risk to reward ratios, profiles are very, very clear. And it's great for swing traders, especially when it's identified on longer trading or longer time frames. Some disadvantages is that it can take time for the pattern to develop and therefore requires a little bit of patience. And then one added disadvantage that's not on here is that it could be a little difficult for a non-seasoned or new trader to correctly identify the cup and then handle. So how do we identify the cup and the cup and handle on our charts? Well, we pull up the chart, we draw it. We have a saying here at iTrendz, if you haven't seen this before, we zoom out, we actualize, then we zoom in, and then we actionize. The real saying is a business saying, and it's actually monetized, not actionized, but we're monetizing here too, but actionize, take action on what you zoomed out and figured out is there, what pattern, price action is going on, zoom back and actionize, take action on it, and then you'll eventually come to that monetizing status. So we want to go zoom out to weekly, daily, 4-hour, hourly, 15-minute, 5-minute. We want to zoom out and then zoom in, right? So we want to start wide, then go tight. And that just helps us get the overall clearer picture. It gives us the market sentiment. It gives us a little bit better of like a clearer view of what is truly going on the stock. So how to identify the cup and handle pattern? Right here we have a photo of Badu that is from marketsmith.com and investors.com. Thank you very much for the photo. This is from 2006. You can see over here, and this was towards 2008 level. But this is a perfect version of a cup, then handle, breakout, and then a continuation in price, right? This is a continuation pattern, right? So most cup and handle patterns are identified and executed on a 4-hour or larger time frames. That's just generally speaking. A key to identifying the pattern is that when it's rounding the pullback after they consolidate, that looks exactly like a flag. So when you are trying to identify, you've got the rounding of the cup and it's going to form that flag in there. So you might be looking at a flag in a chart that is actually part of a cup and handle pattern that can help you identify, okay, this is the extension beyond that breakout point. That might be a little bit different from the extension of the flag breakout. So if you're seeing a flag, try zooming out and seeing, oh, is this a part of a cup and handle, or is this just a flag on its own? So that's one key of identifying it, because the bull flags, bear flags are very easy to identify. So if you see that bull bear flag, you might be also looking at what is a larger cup and handle or inverse cup and handle. So how do we trade the cup and handle pattern? Well, we trade the cup and handle pattern when we are trading the cup and handle pattern. It is important to keep in mind that it is a continuation pattern. So therefore it continues that overall trend, right? It's continuing that overall trend. We were going up on Baidu here in 06, 07. This was through all the, right before the crash, but this is a continuation here, right? It's not like the price does not reverse. This is not a reversal. This is a continuation. So it's very, very important to have on your mind. Patterns with smaller handles do perform better, or do tend to perform better. The patterns typically take weeks to form, typically 7 weeks, sometimes 4 months. I'm going to show you an example here that was actually years and years of a cup and handle pattern that we actually executed back in July of 2021. Volume should increase. This is also very, very important, right? As a price action trader, you're always focused on volume, right? So volume here, the volume should increase in stage 3 and then fall back in stage 4 and then increase again after that stage 4. I don't know why you didn't classify stage 5 as the breakout stage, Mr. O'Neill, but it's okay. It's fine. He's the one who founded it for us, so we're still thankful. But that stage, let's just say stage 5, the breakout stage, you want volume to increase on that breakout. You always want volume to increase on that breakout. That signals that that is a strong breakout above or below that resistance level or that neckline. And then the handle forms a flag. So technically speaking, the entry is on the break of the resistance. However, traders do, and this is for more seasoned traders, they do often take the break of the handle to capture the move up to that resistance level and then trade above that. So a trader might add on the break of the flag, might add on that break there, and then add again above the resistance level once the stock gets above that resistance level and confirms above. So here's an example. This is the example I was just talking about for years. This is basically a 20-year, 22-year flag, all right, at the time, 21-year flag on Pfizer, actually. And so you can see this is a perfect example of a cup and then handle, and then a break of the handle signaled, right? You see this break. You had a fake break here, little pullback retest, right? Or a break retest, and then a real break above. It came back down and retested again, and then eventually shot back up. And then that's when we saw Pfizer hitting its like 20, I don't know, it was like, I believe it was actually all-time highs, if I'm not mistaken. If not, it was about 35-year high. I can't remember at the current moment. Obviously, this is not a live chart. I can't zoom out. But one thing that is important is the neckline break is 40.85%. If you were to go down from the neckline here to the bottom of the cup, it's actually about an 83% loss or gain. There's an 83% difference in between the neckline and the bottom of the cup here. And so as you can see at the break of the flag, this is about an 83, 84% gain above. Now the neckline, where you can also trade above, this breakout here of the neckline, would have just been half of that, which would have been a great move, regardless. However, like I said, some more seasoned traders do trade this breakout of the flag up to the resistance and then add again once you've confirmed above the breakout and then trade it all the way up to its full extension. So this is a bit more of a zoomed in example because it's very not so often that you see something like this, and it's very difficult to execute a trade on a 20-year pattern because, as you can see, there's lots of price action in between. So it's a lot different of a trade than a couple month cup and handle formation, right? Hopefully that makes a lot of sense. So right here, this is Activision Blizzard on a 4-hour chart. This was back before the acquisition news of from Microsoft of buying Activision, right? So we have this cup and handle with a nice resistance formed at this 67.94. The distance from the neckline back down to the bottom of the cup is 20%, 20.5%. You have your easy to identify, that's an easily identify handle right there. Little flag, right? Little pull right here, flag extension, breakout here. The flag breakout was here. And then that was when they announced the news and it shot up to that buyer, that value of 93 or so, pulled back, and now it's been hovering around that 84 to 87 range for a while now. But what's really important here is this 27.76 extension. After you measured your distance between your neckline and the bottom of your cup, you got 20.5. Sometimes you'll experience the extension to be a little bit more. So in that case, and this is just my personal belief on it, if you measure your extension your measured extension should be 20.5%. Let's just take that. And it's more than that. That signals a lot of strength in the pattern to me. That signals a lot of strength in the pattern to me. Now, if it's 20.5, that's the measured extension, and the extension is actually less than 20.5, say it's only 17%, that shows a little bit of weakness to me, because the technical law is that they should be the exact same measurement on either side. So if that is how it should be and it is not so, then it is either weaker or stronger than what it should be. But as you can see, this breakout above this resistance would have done you a very healthy trade right there. I believe we have one more example. Oh yes, this is SPY on the daily here. We're looking actually almost in real time. I believe this was an example done, not too sure, maybe on the 15th of February, but this is very recent. If you've been trading and you trade every single day, you would look at this and you'd be like, ah, yes, we were just at this point before we dropped off the face of a cliff. But this is the daily pattern. I mean, the daily chart here, as you can see, this is a nice inverse cup and handle. We've got an easily identifiable handle in that upwards, just a slight uptrend there, but overall it's failing. It's starting to get lower highs, and the lows look like they're soon to be breaking to make lower lows in the handle. So two things I want to talk about right here, because we haven't talked about what invalidates the cup and handle yet. What would invalidate the cup and handle is if it were to break down on the opposite side of the flag, right? Because if we were to break above this blue level right here, where it says invalidates cup and handle, and break towards the upside, we would just have a massive W pattern, right? Let's go back a second. Let's go to Pfizer. If we were to break back down on this flag here and break below, that invalidates the cup and handle. It's a different trade now. That looks like a little bit like maybe even a head and shoulders slash, it'd be a little bit of a wonky M here, but my point being is that invalidates your cup and handle. Therefore, that is also your stop loss. So another thing I want to talk about here is that many traders would trade the break of the bear flag here down to the neckline, and then either add into the play or unwind the play in the trade, unwind the trade, and then wait for it to retest and then re-enter the trade short once you got your confirmation level. But a lot of traders who don't like to be as risk on, people like to be a little bit more risk averse, will just trade the breakout below. The measured extension here, I could not tell you, but it's about 54 points. So 54 points down, it's going to be a little bit different. 54 points of 480. What is that? I mean, it's not 10%, it's like an 8%, call it 7.5%. So 7.5% down from 426 would be the measured extension of where SPY should be. And actually, coincidentally enough, I'm pretty sure we just hit 413 on SPY. But anyway, that's going into something different. Anyway, so the key takeaways of the cup and handle pattern here are that the cup should not fall more than 50% of that previous push that originally created that first peak. And then the handle should not fall more than 50% of that cup. And so we'll go back to that and look at that in a second. Patterns with those smaller handles or more consolidated handles perform much, much better. Volume should increase in stage 3 and after the breakout, during that breakout stage, which was not a real named stage, but we're going to name it stage 5. In stage 3 and stage 5, that volume should increase. And a breakout occurs when a price gets above or breaks above that resistance level. That is a technical break. Let's just review one time of a perfect cup and handle pattern right here. Let's see. So you have your resistance line. Your measurement is from the resistance or the neckline. Actually, there must be a way I can draw on here, right? Hold on, let's do this really quickly. Annotate. Yeah, there we go. Oh, that's awesome. So we're going to do this. Wait a second. We need red. There's our resistance line, and then we can come down in here and let's do this. Draw it up from here until here. This is our measurement, right? Our measurement. This is our neckline measurement. So the measured move should be identical here on this side, where it should go like this all the way to measure up. This, let's just give that a little exaggerated here, but you understand what I'm saying here. I'm trying to depict that this is your neckline where your break above level up to that next extension that you measured from the cup is the full formation of the cup and handle pattern. You have your handle here. You can take the break up towards your neckline and then take another trade and or add into the current trade and trade it up again. So hopefully that was really helpful for you guys and you guys learned a lot. If you guys have any questions and or want to see anything more on cup and handles, want us to go into more specifics, anything like that, leave it down in the comments below. Be sure to drop thumbs up and also subscribe for us. We're very new, obviously, as you can see, we don't even have 100 subscribers yet. But we do have a Discord that will be linked in the description below. We also have a couple free ebooks that are down in our website as well. Something called our starter kit, which has how to understand options, time frame setups, a little morning routine, and a little bit, one extra little goodie in there. That's kind of good for every new trader to come by. We also have a risk management book, and we will also be giving, we are currently developing, we will be releasing a 5-part series book that has a bundle on all of the most highly probable pattern setups and the most highly probable indicators to use along with those pattern setups. That will be dropping in mid-March sometime. So definitely be on the lookout for that. With that thing being said, though, this has been Zach from iTrendz. See you later. Thank you for sticking around.